What's up, everybody? Thanks for tuning in today. If you're watching on YouTube, please hit the subscribe button, hit that thumbs up. It helps me out a lot, and I really appreciate it. If you're tuning in on iTunes podcast or any podcast platform, thank you so much. Give me a rating and review because that also helps me a ton, especially in the world of podcasting. Today's episode, just to let you know, we're going to be reviewing how to track a strategy, how to determine if you have an edge. This was a question that was asked on a previous episode of Trader Therapy with me, Jack Kellogg, and Kyle Williams. And Kyle did a great job in answering this question, but I want to go even further and share an example of how I track my setups. With that being said, there's many ways to track setups. There isn't just one way. Some people are going to do it better than me. Some people are going to do it worse than me. But this is what has worked for me, and this is what has given me confidence in my own setups. So if you're listening on podcasts, I'm sure you're going to get some good value just from listening. But if you really want to see what I'm showing everyone on YouTube, definitely look on YouTube, Be the Story. Look me up on there. So let's get started. So with the spreadsheet, usually, let me turn this around. With the spreadsheet, usually what I want to do is first off, I want to track the tickers. I want to see what the ticker is, and I want to be able to track where, all the tickers that hit the criteria that I'm looking for. So I want to know, first off, what is the criteria that I'm looking for. In this strategy, you'll see here that I have a tab down here with different types of strategies that I want to track. And this one is an earnings winner. I personally really haven't found, based off this, so much, or I don't have enough data really to show an edge. But what I will say is this is how I track it. I put all the tickers that pop up on my radar that are our earnings winner, and for me, something that is closing strong, or in this case, up a good percentage. And most of these are up over 15% or 10%. Occasionally you'll have one you'll see that is 9.6%. And really, that's the only one. So my criteria was 10% or more. And so that's what I wanted to see. And so any ticker that popped on my radar with a 10% increase from the previous day's close and had an earnings report come out, that will get listed here. And when it does, it doesn't mean, you can go into further detail, like earnings report, and go into details of the earnings and determine which ones you want to add and which ones you don't. I was actually just trying to track all earnings and just see if there's an edge there. That's what I'm doing when I'm tracking a strategy. I'm just trying to find out, is there an edge? And if there is, great. If there isn't, maybe I need to narrow down my focus. Maybe I need to look into each earnings report and see what the EPS is. Or see what the balance sheet looks like, and then determine, make a split spreadsheet between the ones with good balance sheets and the one with bad, and then see if there's an edge there. You'll see that this takes a lot of, work and labor, and trust me, I am not an analytical person. I'm not someone who loves to do spreadsheets, at least naturally. But because of trading, I love trading. And because of that, I love to get an edge. And so I put in the work, and now I'm more of an analytical person than I ever was. So let's focus on one ticker just so you can see. So ATEC on obviously 725, which it gapped up. Oh, that's not a good example. EDAP, on 725, gapped up 24.2%. The volume it had that day was 3.9 billion. I'm tracking volume because I want to see, is there an edge in volume? Is there something that would show me there's an edge here? Because then you can start to narrow down. Once you get all of this done, you can narrow down and be very specific and say, okay, out of all of these setups on earnings, the ones with volume over 2.5 million, what was the edge? Was there an edge? Out of all these tickers, volume over 10 million, was there an edge? So you can really start to play with the numbers. So the whole goal of tracking is so later down the road you can actually track and decipher and determine what the data is telling you. So while you're tracking the data, you're not really trying to say, okay, what does this mean? What does that mean? You just want to collect. You want to collect. And I didn't play any of these tickers. Maybe I played one, I don't remember, but I'm pretty sure I didn't because I'm not an earnings winner player. With that being said, the criteria is important that you track. You determine what's important to you. What's important to me is the gap percentage, the volume, the support. Did it build a support during the day? And I want to know if it did, what was that? Because later on I can track on earnings, the ones that worked out, did it hold support perfectly? Did it use it more like a trampoline? Or did it not even give 2 cents of the support? What did it open at? It's good to know because I want to know, does it stay above the open? Does it dip below the open price? Does it go way high above the open price, and how much percent above the open does it go? The closed. This is important as well. I want to track the close because like I said, everything I list here can eventually become part of my process, part of my criteria for what is an A+ setup. I like to track the high a day, low a day, the float, market cap. Did it have earnings? All of these should say yes, and they do. Warrants, ATMs. This is important to me because I'm a short seller and I'm curious. I mean, if they had warrants and then they continued their run, well, maybe as a short seller, I shouldn't short these, right? So it's important to know. And vice versa. If it does have shorts and it goes further, it could be because there are shorts and there's a short squeeze. It's good for long. So there's a lot of data here that you can determine and decipher yourself and figure out what's important and what's not. But you can see that it's so important to make sure that you track everything. Because the more you track, the stronger your data will be. And then the more data you have, the stronger it will be as well. And then I track day 2. Now, everyone's a little different. You can track day 3, day 4. It depends on what you want to do, right? If you want to swing these, you're going to want to track maybe for the whole week, maybe 2 weeks. If you're going to want to only play these on day 1 and hold overnight, like I was looking at, you're going to want to track what happens on day 2. And you might want to track pre-market. Personally, I didn't track pre-market because it's just not something I want to trade. But you can. Maybe you want to be a pre-market trader and track all pre-market data. That could be something that would be fun to do. I might end up doing something like that. But day 2 is important for me because I'm looking to see, is there an edge holding this overnight? And if there is, how should I play it? And I track the open, the close, the high of day, and low of day. And the reason this is important is because, like I said, if I'm going to buy into the close, but most of these stocks open below the close and then spike, why would I do that and put myself through that pain instead buy the dip and then ride the spike up? And there's so many ways that this data can talk to you. And that's really what it does. It talks to you. And what's very, very good about all of this is it gives you true belief behind your strategy. If you start tracking your own strategy, what you like, right? Because you're going to determine what you want to do. Before you even start tracking the strategy, you're going to say, okay, I really like to short sell. And because I like to short sell, I think what I see as the easiest for me is something that gaps up over 50%. And because of that, I'm going to track everything that gaps up 50%, track the open, the close, the float, the market. Did it have news? Did it have warrants? And then I'm going to see what it does at the end of the day. And then track that data. And then track the next day. And you might find an edge there, and then you'll figure out how to play it. Now, what is huge about tracking data is tracking the charts. that is something that you want to do consistently. Tracking the charts is so important because, at least for me, like I could track this data all day and it helps me because then I can decipher it and figure out what works, what doesn't. But when I track the charts and then read the data, figure out what works, and then after I do that for a while, spend a good hour or two reading all of it, right? Then I open up all the charts, I say, for each of these tickers. And then I just scan through them. And at first, I'm just looking through each one for like 3, 4, 5 seconds, right? Like not even that long. And then I'll do it again. And then if I didn't pick up something doing it the second time, then the next time I go around, I go a little slower and I'll watch each ticker, look at each chart. And I may spend, 5 minutes, 10 minutes, 20 seconds. It just depends on the chart. And then I promise you, after you do that, you're going to start to pick up, at least for me, I picked up a lot of little characteristics in the setup. Sometimes I would find out there's nothing here, at least for me, that makes me comfortable to trade. Or there's other times where I found edges where there's like a 30% win rate, but a huge risk reward. For some people, they love that. I would hate it. So it's not for me. So I don't even touch it. I want something that's 40, 45 plus percentage win, right? And then a 3-to-1 plus risk reward. Something that I am used to and I can handle. I don't like the very low win percentage but a high risk reward. It's just me. But you can find out what works for you. And then you'll start to, after you find all this out and you've seen it so many times because of all those charts, and then you've seen the data behind the charts. It's like the Matrix. It's like you see the charts, you see the data, and then you see all the green things coming through, like Neo does when he first jumps through Agent Smith. If you haven't seen the Matrix, you better go see it because the new movie's coming out. But that being said, you have so much more confidence when you can see everything. So when the stock market opens the next day and there's an earnings winner, there's no question on what should I do. It's here's my plan. Here's what I'm going to do because 90% of the time this happens, 50% of the time this happens, 70% of the time this happens. And if I hold it here, 60% of the time the next day this happens. Like that confidence that you found out, like you found that data is huge because I can tell you one thing, or you can follow a guru and learn a strategy, right? Which you guys know if you've been following me for some time. I have no hate towards that because I learned from a lot of different gurus. I signed up with many different services. But it's way different to hear someone say, this is a strategy, this works, and trust that, than for you to find it and trust yourself. Hope this helps you guys. You guys have a wonderful day. Be sure to subscribe. Give me a rating and review, especially if you're listening on Apple's podcast. And make sure to comment below. You guys know that I like to interact with all of you. So you guys have a wonderful day. And let me know what you think about this video. I really want to provide value. Take care.